subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, so this is the chart of the Dow Jones when it made its high back on December the 5th. You can see we've had a big move down. This actually broke the record. Actually, the fourth, it's number 4th in position. The Dow has been down 9 trading days in a row. That's only happened 4 times in history. I want to bring this to your attention because it's very important. Here they are from good friend Rich Anderson. You can see here the all-time record. Here's where we are here. We broke from December the 5th to where we are now. It was down 3.5%. The annual turn is 15%. One previous year was 1978. It was up 3%. In 1974, boy, I remember this one. Woo-hoo-hoo-hoo. This was a big learning experience on this one, folks. September of 74, the bottom came in October, double bottom in December, and it ended up down 27% on the year. And the all-time record was, you're not going to believe this, folks. Guess whose birthday this is right here? 7/29/41. I was born on 7/28/41. Son of a gun. They did that in my honor. The problem is every single one of these minuses that we had in here meant that, boy, oh boy, look out below because they went a lot lower. You can see here, this was down 15%, was down 3, then it went 15. So pay attention. I think it's interesting to see that we had this right here. Now, the reason this was so skewed is because, remember, July 1941 was pretty good, but remember December the 7th, 1941 was not so good. That was when we were hit by Pearl Harbor, and of course it bottomed sometime in 42, and then the war took us out of the Depression and everything. So I'm just bringing these statistics to you to see whether you like them or not. I just saw it was 6:18 on the clock here. Always really good to look at. All right, let's get back up here to look at a couple of other currencies because this is where I think the real action is today, folks. I showed you the one on the I didn't do the Australian dollar. I'm going to do it next because there are all kinds of A, B, C, Ds everywhere from really long periods. This is the Australian dollar over the last 4 months. You can see the movement down. We've now taken the lows of August the 5th out. That was taken out just a few days ago. We're looking at this number right here at 1.6281. We're trading at 0302, I believe. So we're going to be watching this. But with the Fed out here, all of these numbers are so very, very close. So the Fed could come in and change the whole game. I don't know what they could do if they want to do something, even if they could. I don't know if they can or not. But these currencies are telling me, get ready. They're ready to rock and roll. Now, how much, I don't know. But let's look at the dollar index here. I get excited when I see this stuff because that means we're in the bottom of the 9th with 2 out and the runner on third base to try to win the game. And look who's batting. None other than one of the greatest hitters of all time, Joe DiMaggio. All right, here's where we are. There's where we see it. There's where we are right now with the dollar index. We're right in the middle between these numbers right here. Now, that's not what you're seeing when you're looking at the Australian dollar and the Canadian dollar. And there's another one out there that's doing the same thing. But the pound is actually holding up relatively well. The euro is near the low end of the range. We're going to look at that here in just a second because you're going to see that we have a lot of these things that are just right on the cusp of getting ready to move very, very quickly. And I'm just going to take a look at, this is the forecast. And of course, Fed coming in here doesn't mean anything. We're going to go to the hourly chart and you'll see what we're watching now is there's our recent lows right down here, 104 and change. Not from that low, from right here. So we could easily come down to this level right here. That would be another ABCD. So it's got a lot of room to go in here. That's why I'm saying these Fed boys are going to do something. Remember, we bought the euro here and sold it right there. That was a trade from one of our trading seminars back on, I think it was back on the 25th of October. And then we had this, and now it's just going sideways for a very long time. So this could really be a blockbuster, whatever's going to happen. Because looking out on the daily, it's held relatively well. You see it's still holding right at that 50% the whole move. So something big will be happening. And the best way to look at that is to go and follow the money, as they say in the trade. And when I do that, I've got to cascade these so I can pull it up and see it without too much trouble. And here's where we are here today. This is the, well, I'll get this up here. All right, I took my profit in that right here. But this is what we're looking at here for the dollar. But bonds. Let's just get up to the hourly chart. You see where they are right here, folks? This is the last few days. Now, this tells us we're probably going to get a rally. And I don't know how much it's going to be, but my guess is it's not going to be any more than the 382 off of that number right there, because the bonds are flat out bearish. Anybody that thinks the bonds are bullish hasn't looked at a chart. I don't care about the fundamental. Well, that's what makes the charts. But there's your 382 coming up here. That would be up about a point and a half. I don't think they're going to rally more than that. The reason why is, remember, we had that monster pattern here, that head and shoulders pattern lined up perfectly. We've gone through every single objective in this thing. So all we're going to get now is probably a 382 off of this number right here. And we look at the Treasury notes, they're looking at the same thing. Now, is that going to help the stock market? Stock market doesn't need a lot of help. They got stock with Avco and some of these others, and let's take a look at that. I've already had 2 requests tonight to look at AVGO. We've already looked at Tesla. Made new highs today up there at 490, and AVGO is right there. Hold on. A little bit lower. There we go. All right, we're going to get this up on the hourly. It was ready to make an island reversal, but it hasn't done it yet. But boy, is it close. Shut the front door. Let me refresh this. This can't be right. Yeah, it's right. There it is right there, folks. Here's a trade for you, boys and girls. Well, you're going to have to do it before the Fed does, because it's not going to mean anything. If it closes right in here, we haven't taken out the low of the big day here. This is a really, really classic island reversal pattern. Man, if I had traded puts, I'd buy a put on this thing right now. I'd buy it right in the money at 232. If it whacks you, it's going to whack you pretty hard. But boy, oh, if it gaps below here, it would be like this one right here being a buy. Hello, operator. So we'll see what happens. It's funny money. We'll use monopoly on this. So let's do it. Let's just, instead of doing a put, we're just going to sell 100 shares at 231.89. Okay. And I'll put a stop, making a new high of the day at 241. So I'm going to risk $10 in this. If it gets me, then I deserve to lose, but I'll take this trade day after day after day, and I'll win most of those days, but some days I will lose. Let's take a look. Oh, we've got hold on, I got to get the old clock on the wall to tell me that we've got a commercial coming up.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, this is crude oil, and as you can see here, we are, over the last 8-9 trading days, we've been in this area that looks very, very interesting. I'm bringing this up for a specific reason, okay? As you can see here, we didn't quite make the 786. We had a small ABCDs in here, but this was the key. We missed that by 5 pips. Now, I know it doesn't sound like much, but it's important because look at that 5 pips. You see over here? You see how it's higher by just a little bit? Now, Andrew Lowe said that if it gets above there, above that right shoulder, which is right there, you can see there's the line. If it gets above that, that negates the head and shoulders pattern. Well, boy, I'll tell you, I have a hard time with that because this only was there a second and it went back below it, but you can't do it because it's not a head and shoulders based on his book. But that's all that was. Can see on a smaller time frame, and all we've been doing here from yesterday, all right, all we've had is a nice run up, and you can see it's trying to pull right back down to guess what? The 382 here came within a tick or two ticks of the exact 382. So nothing bearish about this. Mike Moor will be our guest here at the break, so we want to pay attention to him because he has some really great charts, and he's been spot on what's been going on with these markets, with energies, and some of the other things too. So we want to listen to what Mike has to say. Okay, now let's move over and talk about the Japanese yen. Here's the Japanese yen. Now this is what I was looking today. Remember, we were looking for a buy on this earlier this morning. We exited our long up here when we reached that level. There was the buy right there. You can see the beautiful ABCD pattern here. There was the exit, and now it's trending to the downside. This still has a bearish bias, but let's just move here. And everybody's telling me something that's in the news all the time, and that's the fact that Dow is down 9 days in a row. Let's get together here, put the right time frame up here so we can see this on the hourly chart. And then I want to show you where we are on the hourly with this dollar index. So all we did today was to make this ABCD pattern. That's really all we did. There was your 382 yesterday, or just right on with your 50%. Then you came down, and today's rally stopped right where it should have. You can just draw it in right here. There it is right there. There was the early morning buy that we were looking at early in the morning. We went right up to it. That was an easy couple $500. It went to this a little above the 618, but we've got the Federal Reserve out here, folks. And they always make it fun, don't they? Let's look at this on the 4-hour chart, because this is the one that's really important. Here we got Fed acting today. And if you bring this over, you're going to see here the old high we had way back here. There's where the big high was, way back in July. So we've been doing a lot of work here from this last few months, from December, all the month of December. We've had this big run up. And boy, if this doesn't hold it, then that's it. Remember, that was a sell signal. I showed it to you yesterday on the hourly chart. I'll show it to you again. So, well, there it is right there. Went above it by 10 pips and then had a pretty nice move. So I just think that this is whatever the Fed's going to do. I really don't think they have much control over what the market says about it, because the market's screaming to me that they're looking at higher interest rates. Let's just look where interest rates really are. We'll go to the Treasury notes, okay? And Treasury notes should be right here. There they are. And let's just get this up and get the daily up. Just take a look at it, because it's telling you that rates are going higher. They're not going lower. Here's the notes right now. All right. Now you can see we had this little tiny rally in November. There's the election. The market rallied up here. Let me refresh this so we can get everything together. Wow, there was a gap down there. I didn't even realize that. That's another negative sign. So far, we've held the 786 of the previous range, but boy, this is not a pretty. I have to tell you a funny story about it. This is the 786. They couldn't do that. And look at this. We rallied from the 11th. This almost a 1 month rally here. Well, 2.5 weeks, and all we can do is to make a 382 off of the high. Hello, operator. This is not good. Now, maybe it's going to go back up, but the overall note picture, just looking at this on the long-term weekly, is getting worse and worse and worse, because here's where we are now, because there's your 382 off of that high, and that tells you that, we're going to get back. When we get below here, folks, interest rates are going to be at 6%. So let's keep a close eye on that. Very, very interesting, because the action here that we're going to see with the Fed will be in the notes, the bonds, and the currencies. I'm sure the stocks will react, but they react anyway. They go 30, 40 points higher, all the time. But the Dow Jones looks absolutely horrible. The Russell looks horrible. The advanced decline line looks horrible. And yet everybody's buying Tesla and Avco and all these others. And I know that's only about 30 or 40 stocks, but right now they're running. This happened again, folks, back in the 50s. They were called the Nifty 50, Polaroid. Johnson & Johnson was one of the Nifty 50. There were a whole bunch of them in there that no longer are in. Kodak and Polaroid both gone. They're not in the stocks anymore, because they've went tapioca. So we got to pay attention here. We got some big things happening today with the Fed, and we'll be able to put the egg on our face at the end of the day and say, well, I got that one wrong, but guess what? That's what stops are for, folks. If you can't put a stop in, get out of this business. Because if you don't put a stop in, you're telling Mrs. Market, look, I know where it's going. I don't have to worry about any risk. Hello, operator. Come on. Nobody knows that. Nobody knows what's going to happen next. That's why you've got to protect yourself. If you don't do it, nobody else is going to. Nobody else is going to put that order in for you. I can promise you that. Okay, now let's take a quick look up here at we've already looked at the Australian dollar, the dollar index. This is where we want to be watching, because here's where we are. You can see we're looked at it before. I want to see it again, because we've been rallying now since there was the December 6th. Remember, we had that big move down on December 6th, and since that time, we've been going, the dollar has been rallying up very quietly. So this might be all it gets. I mean, hasn't done very much. We haven't even made an ABCD on this yet. So the ABCD will take you just above this level right here. So the key level to watch, and this is going to be a big move. Whatever it decides, well, I think it's going to be a big move, because if we look at this over the last few days, it's coiling. This says the dollar wants to go up. You look at the euro, it says it wants to go down. So whether that's going to be the case or not, I don't know. But there's the target that's up there. And okay, I don't know how to answer that. Mike is on the other line there, so I have to figure out how to get him in when the break comes up. I'm not going to worry about that. We've been asked to take a look at silver. Hold on a second. I'll get it right up, and we'll take a quick look at silver, and we'll get this up here. It's still, talk about a market that doesn't have any friends. This is silver. We've already gone through the head and shoulders, but look at this. This is a daily, folks. You can see where we are now, way back here, and we'll just draw this in and get this out of the way, and you can see we're just really setting right at major support right here, right now at the 786. So 25, 30 cents lower, we're going down big time, but this also could be a really good support. The problem is you got to go through the Fed. So if you're in there, put the stop in. If you get a bad fill, at least you'll be out of it and you don't have to worry about it. So that's what we're watching here in the silver. Remember, gold has still had a pretty good run, but it's been bearish, just like we thought it was going to be. It's hit those 382s all the way down and all the way up. So let's pay attention. We'll take a break here. Hopefully we'll have Mike.
The Tiger Dollar Holiday Double Bonus Sale 2024 is here.
Easy money.
Now through December 23rd, we've doubled the bonuses. Don't miss your opportunity to get a double bonus up to 40% on your Tiger Dollar purchase. Here's how it works. Purchase 500 Tiger Dollars and receive 100 bonus Tiger Dollars. That's a 20% bonus, $600 total. Purchase 1,000 Tiger Dollars and receive 300 bonus Tiger Dollars. A 30% bonus, $1,300 total. Purchase 1,500 Tiger Dollars and receive 600 bonus Tiger Dollars. That's a 40% bonus, $2,100 total.
Oh, wow!
But you have to hurry because this Holiday Tiger Dollar Double Bonus Sale ends on December 23rd. Visit the front page of TFNN for details and get your Tiger Dollars today.
Ho, ho, ho! TFNN.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we have Mike Moor of Moor Analytics on the phone right now. Mike, how are you doing? And happy holidays to you, my friend.
Good. How are you doing, sir? Thank you very much. Happy holidays to you as well.
Let's start out with the Big Daddy Rabbit. Let's take a look at crude oil. What do you think?
Okay. Crude oil, we just turned bullish this morning. We've been in this consolidation area here for, almost since mid-October, in a pretty tight range between 66 and 72, basically. And then we turned bullish this morning. We had broken back above, I'm sorry, that's natural gas. We broke above 70.16 to 17, which now has this in a bullish mode. We had been bearish just for a short term yesterday. We had held exhaustion up here at 71 even, fell back down through this line, which was bearish, and we came down, we held this exhaustion level right down here at 68.81 after it had corrected against this move up from here. So now the break back above this line has it bullish. We take out this line above here at 70.81 plus 2 per hour starting at 2 o'clock p.m. Eastern Standard Time. That'll warn of continued strength. If this rolls over in the days ahead and happens to take out this formation down here, which is going to come in at 66.95 to 96 today and just move up a couple ticks each day, that'll project this downward $4 minimum, $10 plus maximum. And also today, if the gap higher remains in place, we're going to leave a minor bullish reversal below on the day as well. You want to look at unleaded gas or heat, or you want to go to natural gas? Or
let's do natural gas. We have several people asking about that because it's in the news a lot nowadays. And so if you do natural gas, then we'll do heating oil and then also RBOB.
Sure. So natural gas has been in this pretty consolidated mode here for almost since August, bound between 365 and 290. Yesterday we turned bullish short term also. We had been bearish in here, and then we broke below this formation here, and then we broke back above it. We got bullish, and that's denoted here. I said on.
It's been very volatile, Mike. Is that unusual for natural gas to be this volatile this time of the year? Because
you never know with natural gas. You know what I mean? They could just. I wouldn't have a good idea in this time of year necessarily, but it certainly has been whippy. But I do think that because of, this is a consolidative, maybe basing area here.
Sure.
If we take out these levels up in here, that could put a basin in the market. I mean, this could build sideways a little bit more, but if we take that out, that could start this in a bullish trend. Likewise, if we take these lower parts out, it could be in just the other way. But right now, we're in the middle of it, and we just got bullish on the break back above 319.10. I'm sorry, let me just pick this up from 319, excuse me, which now warrants a decent strength. We'd seen 203 ticks going into this morning, but it also traded up to 344.10. Now, if we take out this formation above, which comes in at 353.90 minus 0.2 of a tick per hour starting at 1 o'clock p.m. Eastern Standard Time. That's going to project this higher, 450 ticks minimum, 900 ticks plus maximum. If we were to break above there decently and back down through it decently, then I'd be out of all long short again and look for a smack back down, likely down to the 310 area.
Okay. Could we do heating oil next?
Yep. So heating oil, pretty similar to crude in that it's been consolidating for quite a while, but we broke above 2 bullish formations in here today. The trade back above 223.07 now warrants a decent strength. We've traded up to 227.97. And then the trade above 225.54, this line right here, further projects us higher. If we were to fail back down through that line decently, that would want a renewed pressure, and I'd be out of longs at that point. That comes in at 225.48. -1 per hour, starting at 1 o'clock p.m. Eastern Standard Time.
I imagine this last burst, the last 8 or 9 days, is because of that really cold weather in the Northeast. I mean, that's because now it didn't freeze over Niagara Falls, but it's been pretty cold. Now that will affect it. Doesn't that affect the prices for at least a short term?
Yeah, you'd probably be better at the fundamental picture than I would.
Mike, time out. No. I don't even know how to spell the F word. Well, I know one of the F words, but that's a short one. Fundamentals, I don't know how to spell that. So no, it's not me. I just look at the charts. I'm just assuming if it's cold, they're going to use more heating oil. But, sometimes maybe it's not. If it's too expensive, they won't use it.
Stands to reason. But usually the technicals keep me straight. So, they're usually something more that I go to. Well, in the technicals also, the technicals basically embody what the fundamentals are doing, because the technicals, the price of the market is a representation of the sum of the knowledge of all the traders trading that market at that moment.
Yes, sir. It sure is. Yep.
It's not just some side kind of weird tactic. It's a real reflection of what's going on. All right. So the unleaded gas, or RBOB, if you want to call it that, the trade, hang on a second, the trade back above this line right here now has this bullish. That line came in at 197.12 at 11, and now comes in at 197.10, so it moves down very slightly. A decent failure back down below the line would renew bearishness. We'd gotten bearish up here the other day at 199.65 and rode that down to 193.81. This pop back above this line puts this bullish temporarily, but if we fail back down through this decently, that would warn of renewed pressure. I would not get short leaning against this line, but I would reestablish shorts if I had them up above here, below there. Also, there's a formation down below here. That's going to come in at around 191.68, and a decent break below there would project this downward at least 10 cents, maybe as much as 25.
Okay. All right, we've got to take a break here, Mike. Stay with us. We're going to pay a few bills for TFNN. Mike Moor, more analytics. We'll have more when we come back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back with Mike Moor and Moor Analytics. Tell us what you're looking at, Mike.
Thank you. Larry, just by the way, did you want me to jump straight to the SPs, or did you want to go over Brent and gas oil?
No, Brent, I'm not. We only have a couple people that are happen to not be in the room today that do Brent. So let's go with the S&P. Everybody likes to see what you're looking at here. So tell us what you're seeing here, my friend.
So I know I always recap this, but just to keep everybody on track, if you've been watching Larry's show for a while, you know that I've been bullish since holding macro exhaustion at 35.02, and we've bounced 2,644.5 handles into this extensive bull trend. A lot of other bull calls in here. The past recent shows, I've been updating this one projection to the upside from 56.7850, which projects this upward 240 minimum, 570 plus maximum. We've now gone on to attain 468 of that so far. Currently, we are in a consolidation area. And by the way, I will say that 71 handles of this was the spread differential between the December and March contract, which I think was the largest spread differential I've ever seen.
I've never seen one that big in my life. I didn't believe they could be that big. That when I first started trading, the whole thing was valued at 103 back in 76. I mean, that was a long time ago.
Crazy, right? So right now we're in between two different formations right here. If we break above the upper formation, that's going to come in at 61, 51, 31, minus 14 per hour starting at 1:30 p.m. That's going to project this upward 50 handles minimum. If we break above there decently and back down through it decently, I'd be out of long, short, and looking for that to come back off, probably 50 handles. If we take out the lower formation, which comes in at 61, 16, 26, plus 5 per hour starting at 1:30 p.m., that will project this downward 30 minimum, 70 plus maximum. And that likewise, if we break below there decently and back up through it decently, look for decent short covering to come in, and they'll likely run back towards this upper bounds right here. You want to take a look at the gold?
Oh, yes, that would be question number. Then we'd also, please do the gold.
Okay, so the gold here, just as backup, just long term, we've been bullish since 2018, and we've seen 1,618 per ounce. A lot of other bullish calls in here. One of the ones, macro things I've been updating is the solid trade above 2147.50 to 840. Projects this upward 151 minimum, 954 plus maximum. We are 653.4 into that. Now, all these bullish calls are on hold. The trade back below 27.45.90 plus 3.5 per hour has brought in 99.8 of pressure. That was the break below this line right here. So a nice smack down, and then further shorts below this line, which came in at 26.85.20, 26.73.50. And now we are resting right above another formation, and a decent break below there will also warn of decent pressure. That's going to come in at 26.46.70, minus 1.3 per hour, starting at 1:20 p.m. If we were to break back above this line decently, that's going to warrant decent strength. That's going to come in at 26.80.30, plus 1.8 per hour, starting at 1:20. And also, if we see a maintained gap higher tomorrow, that'll leave a minor bullish reversal below. I think this is still poised to come off. We'd also left a minor bearish reversal above there that I didn't mention.
Mike, do you have the Treasury bonds also?
I don't really analyze them. I can pull them up if you like.
No. It's only the things you're analyzing that I'm interested in, because you do. I happen to be looking at bonds, and I think they look bearish, but what do I know? I'm just following charts. So no, that's just fine. We have one other question. Do you ever look at any of the soft commodities like coffee or cocoa or sugar or anything like that? A question from Albuquerque, New Mexico came in.
Yeah, I used to. I just there's only so many markets I can analyze.
I know that I'm under the same constraint, so I don't look at it too much. But they do trade just like everything else. I mean, they have their ups and downs and crop failures and the whole bit, so they do respond pretty well. But the question was asked if you do that, so that's not a problem. Is there anything that you see that is possibly troublesome in any of these energy complexes here that could tip the apple cart either up or down that you see coming?
Well, the natural gas right here, if we break, we're bullish right now. We just broke back above this line, which made this bullish. But if we take out this formation up here at 353.90, and that decreases very slightly, maybe a tick or two a day, that's going to project this upward 450 ticks minimum, 950 ticks plus maximum. So I would be paying attention to that. And then obviously the energies have been in this consolidative phase basically since the beginning of October. Once we break out of this phase, I mean, we're going to see one move one way or the other, up or down. This is not a political statement at all whatsoever, but just as a reflection on policy, the energies, I would expect in general, the pricing of them to come down during the Trump administration, because he's much more for drilling and for natural gas. I'll just show you something real quick, because you've been interviewing me for quite a while, Larry, but this right here was in late November 2020, right before Biden was elected. I had one of the largest predictions I'd ever made in the unleaded gas. It was for 25 cents minimum, $1.30 plus maximum, and that's when we were trading around $1.23 per gallon, and we rallied from there up to $4.32 a gallon within the next 2 years. So I mean, then we rolled over in here, but that was due a lot to the restrictions in there. So
we're setting on pretty strong support right now, aren't we? It has to hold, otherwise it.
Yeah, I mean, it's not all due just to the presidency. I mean, there's so much. Who knows what's going to happen in the Middle East? It's a big wild card factor in there right now.
That's a question that's been posed for 3,000 years. Hey, Mike, we want to wish you a Merry Christmas, and we'll have you on right after the first of the year. Could you do that?
Absolutely. I appreciate it.
All right, we'll look for you around the 6th or 7th of January, whatever fits in with your schedule, okay?
Okay, fantastic. Thank you, Larry. Thank you, students.
Thank you. Mike Moore, More Analytics, folks. Just go to More Analytics. That's MOORanalytics.com. And I think we have another break coming up here in about 43 seconds, but let's get the old charts up here. We've got to cover a couple more that people have asked about. So just bear with me. It only takes a second to get this thing up and running, and then we'll have a pretty good idea of what we're looking at. And hopefully, anyway, let's see if it all pops up, and we'll get moving on and There's what we're looking at here. Hold on, we got the Federal Reserve coming in here in just a minute, folks. But I did want to... There's the break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're going to take a look at the cattle. You remember here 4 days ago, we went, this was last Friday, we hit that 193 level. It's now dropped 5 handles, folks. That's over $2,000. It's coming down quickly, much like we did in some of these others. And if that's the case, we could be looking at a pretty big move down here in cattle. So it started out the right way. We've got our stop at break even. We're going to be lowering that in the next day or so we lock in some nice profit. But we also have one that is not working. And let's just take a quick look at it as we can pull it up here as quickly as possible. That is the soybean meal. We've handled it as well as we could, but it's just not turning up. I don't know if they've got the memo over at the Board of Trade that this thing's ready to go higher or not, but so far they have not. So here is the March soybean meal. We want to get this up here, and we'll be able to see where we are. Get that hourly chart up because that's what we were putting it on. If you remember, I recommended this several different times in here. We bought it here. We said, put your stop at break even. We bought it again, put a stop at break even. We went through that, and we were buying today at 288. We're now out $1, $100, and our stop, we're risking $4, so your stop is going to be below here. I don't know if it's going to make it or not because we're still $1 away and we could easily get stopped. But this for a longer term trade, if we go back, and we've done this before many times, that we go back and look at the larger patterns that are here, this is a major, major pattern that is forming. And this is soybean meal, folks. This is tofu. This is feed for the expensive animals, you know, and so plus all the stuff they use for cereals and everything else, and vegetable hamburgers or whatever they are. But this is a big deal down in here, so we want to watch it. It's been down now 10 days. It's been really good to us, but right now it's not so good. We're out about actually $100 as we speak right now. So let's pay attention to that. Now, all this, try to do something nice for your neighbors, folks, and get ready for the Federal Reserve, because they're going to be rocking and rolling here in 4 minutes. So live every day in an attitude of gratitude, and may God bless, and we'll see you on the flip side tomorrow.